Hello and welcome to Bloomberg Quint. Agam and I are back again to wrap the markets for you. Well, it was a good start for the week. The Nifty did see a weak opening, open in the red, but eventually saw a smart recovery. So if you can see, the Nifty recovered again during the last hour and a half to end about 35 points higher at 8,607. So some late trade recovery coming in. The important part is that the Nifty was able to hold on to 8600 even as the odds of a Fed rate hike have risen. Surprisingly, the rupee also did not react as adversely. Agam, the rupee depreciated just about 0.1%, and this is despite the comments that came in on Friday from Janet Yellen. Let me also tell you that Japan shares saw a fantastic rally, ended about 2.5% higher, even as the Bank of Japan chief said that he would provide further stimulus if required. So I don't know if that signals more liquidity for the global markets, and if it's a good thing, and that's why we saw that rally, because Europe continues to remain weak. European shares opened in the red and continued to slide even as our markets ended. On the commodities front, crude oil corrected, lost about 1.5%. So we're back to about 46.5 to 47 kind of dollar a barrel levels. Nifty breadth kind of improved to 3:2 by the end of our trade. So it was a smart recovery, but overall the trade breadth, overall if we look at the Nifty universe, the breadth was not on the favorable side. But what are you learning from the FNO trends?
Well, nothing really. At the end of the day, we're still around the same levels, right, that we've hung around for the last couple of weeks. So we really haven't seen a big change. Of course, we did see that recovery in the last 1 hour of trade, which began around 2:30, and that's also the reason why we have seen a lot of activity around the 8600 mark. So let's take a look as to what's happened in the options market. In terms of activity, once again, no prizes for guessing. We have seen an increase in open interest around the 8600 mark, and we've seen writing in both calls and puts. But when it comes to puts too, we have seen a substantial jump in the open interest for the 8500 put as well. But when it comes to the open interest maximum distribution, while we are looking at 8500 taking over when it comes to the 8500 put taking over when it comes to the put side. On the other hand, it's the 9000 call along with some amount of building up in the 8800 call as well when it comes to giving you an idea of the kind of range we're building in. Of course, for now, it's still a very narrow range when it comes to the Nifty, hanging around 8500 and 8800, and that's what we're looking at. And that's possibly what we will be looking at until we see a clear breakout and a clear up move or a down move when it comes to the benchmarks. But for now, it's still lackluster. Shraddha, I know that we've ended in a positive note. I also know that we've reclaimed the 8600 mark, but once again, we could see a little more consolidation before we see a big breakout. It's only a matter of time, though, I can tell you that too.
Okay, so trends don't look very exciting, and
certainly not.
Okay, if you talk about the Nifty gainers and losers, so what really moved the Nifty today? Well, Z Entertainment, that continued with its upward movement, top gainer on the Nifty index, up 4.5 to 5%, so making fresh 52-week fresh all-time highs again. Tata Motors also saw some good gains of a little over 4%, and that was even as Deutsche Bank, Macquarie, Kotak Securities, all these broking firms raised their target price. And remember, Tata Motors reported their earnings on Friday. We saw that earnings reaction coming in, but brokerages raising their target price, saying that JLR's demand outlook remains encouraging. So that was the key takeaway and the key driver for Tata Motors. You also saw stocks like Hero MotoCorp, Reliance, L&T, all of those saw strong 2.5% kind of gains. On the losing side, IT continued to remain weak. Now remember, Infosys analyst meet that we had. Now most of the broking firms again have cut their target prices on Infosys post the analyst meet. The company did caution that their revenue guidance for FY17 was under risk due to uncertainties, and hence we saw some broking firms like Kotak, Morgan Stanley, Credit Suisse, all of them cutting their target prices on Infosys. Morgan Stanley said that the guidance cut was likely in October 2016. That's what they're expecting from Infosys, but they said that it is already priced in. Credit Suisse said that the Infosys post the recent correction now trades at a 13% valuation discount to TCS. So they said that they do not see too much downside from these levels. But again, on the other side, they're not seeing any fresh triggers for Infosys either. So they've maintained their rating, but a small target price cut coming in. Amongst the other losers, we also had Bharti Infratel, Lupin, private banks like HDFC Bank, IndusInd Bank losing up to 1%. So that's as far as the Nifty was concerned. Other IT stocks, HCL Technologies, Wipro, Tech Mahindra, all of them weak, losing anywhere between 2 to 3%. So that's as far as your large caps and your Nifty was concerned. But the mid cap outperformance continues, Agam. And one stock that I'm going to come to you first for is going to be Sri Renuka Sugars.
Right.
Saw a rally of as much as 7-8% in the early trades.
Yes.
Some news with respect to its subsidiaries.
Right. So if you remember, sometime around last year, its Brazilian subsidiaries had filed for bankruptcy protection. Now, after that, come now, we understand that at least all its creditors in Brazil have now come to an agreement with Sri Renuka Sugars, whereby they are willing to forego about 70% of the entire debt value that stands for that particular subsidiary, that is Renuka do Brazil. Now what happens is that for the remaining 30%, Sri Renuka Sugars will sell one of its Brazilian units for approximately 1400 crores, a little over 1400 crores, and will be paying its debt back, whereby the remaining 70% will be waived off by the bankers. So this most certainly is a very beneficial development for Sri Renuka Sugars, because this also means that it's the other unit, about 4.5 million metric tons a unit, will have no debt at all. So that's also the reason why you are looking at that big gains in Sri Renuka. Of course, we're still waiting for more developments about the buyers coming into play right now. But then again, for now, it seems that Sri Renuka is the clear winner. But we've also had some moves in Claris Life Sciences. Can you tell me a little more about that?
Yes, Agam. So Claris rallied as much as about, fell as much as about 6%. So again, it was your entire US FDA related regulatory issues, something that you've been hearing too often from pharma stocks. This is another pharma mid-cap stock again. So the US FDA had inspected their facilities some time back, and they had received 5 observations under Form 483 from the US FDA. It means that they need to take some corrective action, and of course the company usually has 15 days to do so. So the Claris has gone ahead and said that they will submit their corrective action plan to the US drug regulator in about 15 days. The interesting part is, after they announced the receipt of those Form 483 observations from the US FDA, they also announced that the drug approval had come in from the same plant for which they had received those observations. So generally it could be probably a slight positive in terms of the sentiment, because it's the same plant that it is coming from. But the drug approval cheer was clearly overshadowed by the regulatory concern, and of course it ended about 6.5% lower. That's as far as Claris Life Sciences is concerned. Mid-caps?
Of course, we do have a lot of other mid-cap movers or two. And when it comes to certain gainers, let's start off with Delta Corp. Look at that gains, a little bit above 8.1% gains coming in there. SH Kelkar following suit, once again gaining as much as 8.1%. Central Bank of India, AI Engineering, as well as JK Tires and Industries gaining quite a bit. On the losing end, you have Parshvana Developers taking a knock of around 9.5%, followed by Future Lifestyle Fashion. Surprisingly, this is after we've seen Future Retail also list. That is the back end of the Future Group's operations, the infra of part of the retail operations, and of course Ratnamani Metal along with Hexaware Technologies also showing some amount of weakness. But when it comes to the index itself, we've seen about a 26% or 26-point gain at around 73.61. So once again, not much to take home, but we have seen varied moves when it comes to the mid caps, and on the whole, we will continue to see varied moves when it comes to individual stock and sector. It only comes down to the benchmarks, which may see some amount of consolidation. But is there anything else that we're keeping an eye on, Shraddha?
Agam, two things. As you mentioned, JK Tires ended about 6.5% higher. So that's we've seen some strength building up in the tire counters over the past few days.
Right.
This is something which we saw and discussed on Friday also. So along with JK Tires, MRF, Seat, Apollo, all of these ended with gains of about 4 to 6%, between 4 to 6%. We have a viewer question which has come in. We have Santosh Kumar who's asking how is tomorrow looking for trading. Well, I don't think we would have an answer for that, but yes, I think what is important or what is important to watch out for is going to be the global cues. Anything coming on the global front, any comments, any developments there is something that should guide our markets,
Right.
because even domestically, what are the cues where on 31st August, that is day after, we have India GDP numbers that are going to be out. So in the near term, these are the only
Right.
triggers.
Right.
Anything else that comes to your mind?
Well, I can add that at least from a technical point of view, we have seen a big addition in the 8500 put, which means that the base for the Nifty, at least for the near term, most certainly for tomorrow, stands at around 8500. It will be very hard for traders to take out that level, considering the open interest increase that we've seen not only just today, but also in the previous couple of days, along with the fact that it also has maximum open distribution of open interest in that particular strike. So that's a level we can keep an eye on. On the upside, of course, there will be a lot of resistance provided around the 8700 mark, but once again we're just gonna wait and watch whether or not we actually reach that mark. A lot of these Nifty counters will be the ones which will provide the impetus for the Nifty to move up, but until then we'll just have to wait and watch, because for now there are no big triggers in the market except for global cues, as Shraddha mentioned right now, and once again it's anybody's guess as to what's going to happen tomorrow. But well, that's the market wrap for you, and do join us tomorrow as well as we wrap the markets up for you. But for now, stay tuned into Bloomberg Quint.